In this video, we are focusing on the first in, first out stock validation methodology. Information that we are given is that Crown Cycle sells bicycles and use the first in, first out or FIFO method of stock validation. The transactions relating to their rally bicycle for September 2020 are as follows. On day 1, they had bicycles on hand. In other words, the opening stock, 6 units. The price per unit is 1,000, so 1,000 times 6 gives a total value of 6,000. On day 3, they bought bicycles on credit, 12 of them at 1,250 Rand for a total value of 15,000. Then on the 18th, bicycles were returned to the suppliers. It is those from the 3rd of September, 2 of them. So the returns were together there for 2,500 Rand. 25 bicycles were bought for, or on the 25th rather, 15 bicycles were bought for cash at 1,500 each for a total of 22,500 Rand. And then also on the 25th, bicycles sold during the month were 18. Well, not necessarily a 25th, that's why there's not a date. During the month, rather, 18 bicycles was sold, or were sold, and the selling price per unit is 2,700 for a total selling price of 48,600. We don't know the number of bicycles on hand or the closing stock on the 30th or the value. That's what we have to calculate. So required, calculate the number of rally bicycles on hand and the value of closing stocks on 30 September 2020. So we are going to use a visualization approach to show this very clearly. So on the 1st of September, we had 6 bicycles on hand of 1,000 Rand. So there are our 6 bicycles. Then on the 3rd, we bought bicycles, 12 of them at 1,250 Rand each. So now we have another 12, because we know up to year 6. So these two we can add here, then we see it's exactly double. So it's 12. Then on the 18th, we returned 2 bicycles at 1,250. So we have to remove 2 of these bicycles. And then on the 25th, we bought 15 bicycles at 1,500. So we need to add another 15. So there's our 15 that we have added. And then we sold 18 during the month at 2,700 each. Now, according to first in, first out, we assume those that we purchase first, we sell first. So therefore, they would have been sold in that order. So we first sell those at 1,000 Rand of the 1st of September. Then those bought on the 3rd of September at 1,250. And then those on the 25th, or the 25th rather, at 1,500. So now we have our 18 that we sold, so we can get rid of them. So we are remaining with 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So we have 13 cycles at 1,500 Rand each. That is the value of our stock at the end of the month, our closing stock. So closing stock, 13 bicycles times 1,500, which result in 19,500 Rand. So Let's show now without the pictorial approach, the more accounting approach, how we would do this to determine the number of rally bicycles on hand. We know we had 6 at the beginning of the period. Then we had purchases during the month. So it's our opening stock plus the purchases during the month. We purchases 12 plus another 5. 15 rather, so in total 27. Then we returned of those 27 2, so we have to reduce our stock by what was returned. So we had, what was the stock at the beginning? We increased by how much we bought. We reduced by how much we returned. So 6 plus 27 is 33 minus 2 is 31. That is what we have in fact available to sell. And then we sold during the period 18. So our closing stock is what remains, namely 13. So at the end of the period we have 13 cycles left. So now we can determine the value. So we first determine the quantity. Now we can determine the value from an accounting approach. So we had at the beginning as opening stock units with a cost price of 1,000 each. We had 6 of those. We didn't return any of those. We sold all 6 because the ones that we purchased first, we sold first. So if we take what is available, 6, we subtract 0 because we return 0, we still have 6, we sold 6, so we have on hand 0. So 0 times 1,000 rand is simply 0. Then we purchase next units with a cost price of 1,250 rand each. So we had 12 available. Of those 12, we returned 2. So 12 minus 2 is 10. Those 10 we all sold. And therefore 10 minus 10 is 0. 0 times the 1,250 rand will still result in 0. And then we also finally purchased at 1,500 rand during that month. That was the last batch. We purchased 15 of those. We didn't return any. And of those, we sold 2. So 15 minus 0 is still 15 minus 2 is 13. So we have 13 on hand. And the 13 at hand is at the price of 1,500 each, which result in the 19,500. So the counting approach confirms our pictorial approach. So that's in terms of the closing stock, determining the closing stock. So we are still busy with the same example, the same information, but now we have to calculate the cost of sales for September on the rally bicycles that we sold. And then secondly, we have to use the trading account to calculate the gross profit at the end of September. Note, we can assume that there was no carriage on purchase or customs duty. So now we need to distinguish between our two systems. We have on the one hand the perpetual system, and on the other hand we have the periodic system. So perpetual is the one in pink. Let's calculate the cost of sales according to that. Well, we have 6 units that we sold at a cost price of 1,000 rand each, because that's what we purchased them at. Then we had the 10 units. Remember, it was the 12 minus the 2 that we returned at 1,250 each. We sold those, which gives 12,500. And then we also sold 2 units at 1,500, because remember we have now 6 plus 10 is 16, and in total we sold 18 units, so we still have 2 at the 1,500. Remember 13 were left over, there were 15, we sold 2, 13 forms part of the closing stock, so 1,500 times 2 is 3,000 Rand. So our cost of sales is simply adding all of those. So 6,000 plus 12,500 plus 3,000 will give 21,500. Now let's focus in blue on the periodic stock system. We know according to this, to calculate the cost price, we start with the opening balance. So our opening stock was the 6,000. We add any purchases, the net purchases, so we have to subtract the returns. So we have the 15,000 that we purchase on the 3rd, and then we have the 22,500 that we purchase on the 25th. We still have to subtract our returns, the 2 that returned at 2,500, to get our net purchases of 35,000 in total. Then we have to subtract our closing stock, and our closing stock we already determined was 19,500, the 13 at 1,500 each. So 6,000 plus 35,000 is 41,000. We have to subtract 19,500 and we get the same answer of 21,500 as our cost of sales. Remember, we assumed we don't have carriage on purchase or customs duty. If you had, you would have 2 separate lines here with carriage on purchases and custom duty in order to calculate your cost of sales. So let's focus now on the trading account. That was the number 2 part that was required. First, again in pink, we have the perpetual stock system, which we know we have our sales on the credit side, which from the previous table was the 48,600. It was the 18 bicycles at 2,700 each. So we know on the credit side we have sales. If we visualize our trading account, on the debit side we have cost of sales, and we calculated in the previous slide that is 21,500 Rand. So the difference between sales and cost of sales is our gross profit, so we still need something on the debit side. That will go to our profit and loss account. So let's focus on the periodic stock system. We know we also have the same as for the perpetual stock system, sales on the credit side. On the debit side, we know, however, if we visualize, we have the opening stock, which was 6,000. Then we add our purchases, the net purchases, which is the 15,000 plus the 22,500 minus the 2,500 that we returned for a 35,000 Rand. And then we have to add our carriage on purchases. In this example we had none. The customs duty we had none. And then finally we have our closing stock on the credit side, which we calculated as 19,500 previously. So now we still need something on the debit side. The credit side is bigger, so we subtract from the 68,100 the 48,600 and the 19,500, and then we get a profit and loss of 27,100. So we can see in the perpetual and the periodic stock system, the cost of sales amount, or the profit and loss rather, is exactly the same.